How I made $1,500 in 2 days. I am going to show you the all process, so watch the video till the end. Yes, I made $1,500 in 2 days, 2 trades in total. The question is, does the money matter? Of course it does, but more important is to see them as percentage. I could have made $15, $150 or $15,000, all depend on the account size. So, rather than money, focus on the percentage and use a robust risk management, particularly when you trade with large account. These trades were shared on premium Telegram channel. To be more lucid, I will show the exact entry on MT4 terminal. This is my HankerTrade account, the broker I use. Let me show the first trade, British pound versus Japanese yen. We entered right here and managed to close the trade around 58 pips in profit. Our stop loss was around 35 pips. We risked 0.5% of the account, converted in money is $500. And our profit on this trade was $847, converted in percentage 0.8%. Let's show you the second trade. The British pound again, because we mostly trade London session. This time, versus dollar. We entered right here and managed to close the trade around 59 pips in profit, very similar with previous trade. Our stop loss was below this low, and once price bounced in upside direction, we moved stop loss to break even. We risked 0.5%, the same with previous trade. I am going to explain step by step how we found these trades. Before that, I have an advice, especially to new traders, when they see these numbers. It's easy to get too focused on results, especially when starting out as a trader. To you, trading is black and white, you make money on a trade, or you don't. A losing trade is viewed as a failure, something that needs to be fixed, and a winning trade is viewed as a success. All of us want more successes than failures, but trying to trade with this mentality can actually lead to more failures. You will never have perfect results, markets aren't that orderly. And you don't need perfect results to make a lot of money. Even winning 50% to 60% of your trades can produce monster returns. Striving for perfect results is a fruitless path, which is actually likely to make you overanalyze the market, resulting in even poorer performance. Full-time traders focus on the perfection of the process. Let's get back to charts. This is a quick update of British pound versus Japanese yen that we shared on YouTube on 14th of November. As we can see, price broke below the liquidity level, filled the imbalance zone, and bounced from the fresh demand. This was a textbook setup. We have all confluences together. This gives the demand zone higher chances of success. According to levels and zones, this setup offered us almost 1 to 5 risk-reward trade. That's all about this quick update. Let's continue with our trades that we mentioned in the beginning of this video. GJ here, 15-minute time frame. What we notice first, it's a trend line and price broke it. Of course, the majority of traders are going to enter a sell trade, but a trend line breakout is not enough, at least at the current market price. As we can see, after a strong bearish sell-off from the top, price is losing momentum and is not recommended a sell trade. Right after these strong exhaustion, price pause or pullback for a while. This is the nature of the price action. I base this assumption on my statistics, and it is not random thought. So, we didn't enter a sell trade. Let's check the market structure. We have an impulse, a correction, then a large impulse. Price is correcting at the same distance as the previous one. So, in overall, we have a continuation AB equals CD pattern. In this moment I decided to go for a short-term buy trade rather than a sell trade. Another confluence was the fresh point of control of the previous day that correlate perfectly with the correction. I repeat, this was a short-term trade. I put a conservative stop loss under the low of the wick and the first take profit target at the supply zone above. Price continued to consolidate for a while. This is a little bit annoying when you have an open position, but anyway. In the end of the consolidation, price took the liquidity below and bounced in upside direction, reaching our target. This is why it's so important to place your stop loss in a conservative level and not being greedy by using a very tight one. As I mentioned in the beginning of this video and on other videos in my channel, after these strong impulses, I prefer to collect my profits and jump out of the trade, most of the times price pullback. We also have supply zone and retest of the trend line, two correlations that we should keep in the consideration. As we can see, after testing all the supply zone, price dropped in downside direction. We made the right decision. Let's shift to our second trade. Recommended broker is Hanko Trade. Hanko Trade is offering a diverse range of trading instruments and services. The most prominent advantage of Forex trading through Hanko Trade is the offer of low spreads to its customers. You can open a live account in seconds because no verification is required. Fund your trading account with any of the major cryptocurrencies as Bitcoin, Ethereum, Tether and more. Hanko Trade's matching bonus option allows clients to enhance their account margin. The amount that is deposited by the client will be matched and credited into client's trading account. Sign up with the link in the description and deposit to receive your guaranteed 100% bonus. On 1 hour, price broke below the liquidity and touched the demand zone. We can enter a trade after the candle rejection as I actually did, or shift on 15-minute time frame for more accurate entry. We marked the last lower high as the critical level. For extra confirmation, we are going to wait for break of this level and then consider an entry at pullback. This is how we shared the setup on premium channel. Target on this trade is the imbalance zone above. As you can see, the 1 hour entry is not as much accurate as could have been in 15-minute. Even though they don't have too much difference in the price, but the new developed structure allows us to put a tighter stop loss. This is the main difference between these two entries. In this moment we moved the stop loss to break even. Price made a pullback but didn't stop us out and reaching the full target at the imbalance zone. I hope you have enjoyed the video. Don't focus on the money, focus on the process.